is Savita Subramanian. Welcome to Chartsarefun weekly session. This is for the last week of November, the week of November 25th. Recording this after the market closes, a holiday shortened week. We were off on Thursday. This is on the November 29th. So we're going to start off with the market in terms of some key ETFs, index ETFs. Look at how they did in the month of November. Then we will look at retail. You know that this is the season where the sector performs extremely well. We look at what the consensus is. Consensus is that the sector doesn't do so well during the holiday season and really takes off after the holiday season, which is the first quarter of the new year, is when retail stocks finally start moving again. But in the month of November, it tends to do well in anticipation of good retail sales. So we look at a Barron's article. We look at the two key ETFs. There is the equi-weighted ETF XRT, and then look at the market-weighted ETF RTH. XRT is the Spider Retail ETF, and the RTH is the Retail Holders ETF. So we'll look at both and look at some key stocks. In the equi-weighted, we'll look at Carvana. And then on the RTH, the market weighted, the biggest is Amazon. We look at Amazon and then Walmart, which is the second weighted stock. With that, let me share my screen and look at the market. So this is our blog site at substack.com, chartsarefun.substack.com. We appreciate you subscribing to it, just your email, and you'll get blogs as it's posted every day. This is just the archive where you can see all the blogs that we've been posting regularly. Our YouTube site is also Charts Are Fun. The channel is called at Charts Are Fun. We appreciate you subscribing to the channel. And then if you like the videos, we hugely appreciate you hitting a like on the videos. I said look at the market, look at core ETFs for the month. So this is the month of November. We're starting off with October 31st. The best performer was crypto, the core, the biggest crypto ETF, GBTC, Grayscale. This has been around for quite some time, even before the other ETFs like Fidelity and the iShares and so on got introduced at the beginning of the year. Grayscale has been around for some time. So GBTC here shows a 38% intra-month gain from October 31st. It sees that we already had a bit of a gain till after the election results, and that's when it took off. So from the 5th going into the 6th, after the election results were announced overnight, it took off and has been steadily climbing. We did get a pullback from last Friday to early part of this week for where Bitcoin very close to 100,000, couldn't take 100,000 out, came to 99.6 thousand, pulled back towards the 91,000, and then rebounded towards the 97, closed a little above 97 today. So it doesn't close, it trades 24/7, but currently it's trading around the 97 plus range. We got to see if Bitcoin is able to take out 100. If it does take out 100, if you look at the longer term chart, especially the monthly chart of Bitcoin, I've shared this before, the target is closer towards the 132,000. So if it takes out 100, it could run towards that, but there's a chance it may pull back, digest some of these gains, and then from there resume the next climb. So we'll see. But by far the biggest gainer of this month has been Grayscale. ETF, GBTC. The next big is small caps. We know that small caps have been waiting on kind of some form of a trigger. Apparently, the market is extremely bullish about the Trump administration. They think that it would be pro-US markets. Any kinds of tariffs and others would create US's competitive position stronger. And the small caps that sell into the market domestically within US will be better positioned to get benefits from it versus, exporting or in this particular case, importing products out from China and everywhere else. So that's where small caps have done well. And also part of what has helped small caps is the interest rate expectations. Market thinks that there's going to be tax benefits. Tax benefits will hugely help small caps. So that's the other core thing that market is being bullish about. And he's talked about bringing the corporate taxes down from 22 to 15%. And also, if interest rates keep coming down, if the Scott Bessent, who's been appointed as the Treasury Secretary, if he works out though the FOMC makes interest rate decisions, not the Treasury, but many call him as the shadow Fed. He's going to be really monitoring what the Fed does and in many ways try to control that. But we'll see. Fed is supposed to be independent, should not be impacted whatsoever by the president or the Senate or the Congress. But we'll see. At this point, small caps have done well. So that's the second biggest gainer at over 11%. The third one in this particular case is Dow Jones. Dow Jones had a good lift, hit a target that we were expecting somewhere towards the, closer towards the 45 or so thousand, and it kind of touched that. And then the next big gainer has been S&P 500, and the one right below it is QQQ at 5%. QQQ and S&P have been trading in a tight range. Not much of course, there's an initial gain after the elections on 6th November, and then since then, kind of flatlined around that level. And then the dollar at 2.3% held kind of relatively flat throughout this time. TLT, the long-term treasury, because 10-year yield had shot up quite a bit from the point when Fed made their interest rate, first 50 basis point interest rate cut on September 18th. 10-year yield had shot up from 3.6 all the way up to 4.5 over the next several weeks, over the next 6 to 7 weeks. Recently, it pulled back towards the 4.2 level, 4.3, 4.2 level. So that's helped TLT get a bit of a bid this week in particular. So we see that TLT for the month closed up to almost 2%. And then the negative ETFs for the month was emerging markets. Emerging markets are concerned about tariffs being imposed on them. China, in particular, is a big part of the EEM, the MSCI emerging market. So that didn't do so well. It was down to 2.7%. And then gold was also negative. Gold likes uncertainty. Now there's less uncertainty. The market likes the fact that now the election results are out. So there's certainty in there. And gold took a bit of a setback. So gold was down 3%. With that, let's look at retail. This is the holiday season when shopping is at its peak. And Barron's put out an article saying that retail stocks gain as America shops, but beware the silly season. And what they're really talking about is the fact that if you look at how retail performs from the day after, from the day just before Thanksgiving till the end of the year, till end of December, it actually underperforms S&P 500 by about 1.5 percentage points. So on average, it only gains 0.3%. And part of that is during the period of the holiday season, there's uncertainty. Market doesn't fully know to what extent sales is going to happen, to what extent retailers will be able to get rid of the inventory, and how much the buyers will take advantage of all the great deals out there, because we know there's a lot of discounting that goes on during this time period. That said, if you look at the first quarter, as Barron's article says, that's when it outperforms S&P 500. And on average, the retail ETF gains 3.8% in the first quarter, and that beats S&P by 1% point, is what they claim. Now, the equi-weighted Spider S&P retail ETF is called XRT. And we look at, in this case, there are 78 holdings, and we're just seeing in this particular case, Carvana at 2.2%. But if you really look at the spreadsheet and look at all the holdings in it, we'll see that pretty much across the board, if I just zoom it up a little more, they're all, in this particular case, you can see that 2.25 Carvana, Warby Parker, Victoria's Secret, Revolve, Sprouts, Pharma, GameStop, all of these are in the little less than 2%. The highest is Carvana, 2.25. So they're all equi-weighted. They're kind of balanced. Walmart, the behemoth of retail, it has done extremely well. As you can see, is number 20. Like it starts off at row 6, so closer towards 17th or something in the ranking in terms of percentage holding. Walmart is at 1.4%. And Amazon is here as well, further down at number, in this case, 21. Amazon at 1.39%, and so on. So these holdings, in essence, tell us that it's equi-weighted. And key is, if you look at the XRT seasonality chart, we can see why Barron said that. You can see that the month of December, the average gains, and this is looking at since the seasonal, call it the secular bull market, started in 2013, over the last 11 years. Well, say the last, yeah, 11 years, 2013 to 2024, you can see that average gain for that month is only zero. It's kind of flat. And 45% of the months it gains, the other 55, it's actually down. So it's a flat month. December is not really much of a gainer for the retail. November, however, is strong, but this is the first part of November. That's what Barron's really says, that most of the gains in retail happens at the before the holiday season kicks in, and from the day of Thanksgiving onwards, it really has a ho hum month. But then moving into the month of January, we can see from zero in December, it shoots up to 2.7% average gain. It's 50-50 though. 42% of those months it gains, the 58 it doesn't. The next month, February, is also 50-50, again a point 0.2. But seasonally, the first quarter, we do have a strong month of January gains from a seasonal perspective. Now, XRT, which is the equi-weighted ETF, Spider ETF, the daily chart has an ascending triangle, hasn't quite met its targets. We'll see if early next week we get to meet it. And then from there, maybe because it's stretched quite a bit up from the breakout, we did have a breakout like on Monday of this week. That's when it broke out from 81 all the way touched 84.8, and then pullback has been consolidating. If retail sales come in strong over, after the Cyber Monday, Black Friday sales is going to come out starting tomorrow, and then we will get to see the trends after Cyber Monday from Tuesday onwards. If you do get some form of bullish news on the sales, market is expecting that consumers this year have been waiting on these deals. So there is, again, because they're cash strapped, interest rates have been high. They're very sensitive on pricing. So Walmart, as a result, has been benefiting because people are price conscious, and Walmart is the king of price, provides the best price deals from retail products, and hence Walmart is the one that has really been gaining. However, Dollar Tree, Target, others have been really crushed after earnings. So it's been a bifurcated retail market. Some gainers have been doing extremely well, Walmart in particular. Amazon actually is doing quite well as well. We'll look at their chart, but many others are really struggling. Um, so we'll see if the ascending triangle pattern at 86 gets met. If it does, though, I would be cautious on much of any upside looking at the seasonality in December, wait for a pullback, and then maybe if we get pullback towards the 78 level, close out this gap right in that 77, then long term, however, we see a much more bullish picture for XRT. This is a beautiful cup from 79.87 to 53.5 to 79.57. That cup then formed a handle over the next 3 or 4 months from May all the way till October. So we see that handle over the next 5 months, and then the breakout. That breakout measures to 105, and we are currently right below 83. So that's a 22-point move, $22-23 move from where it closed, and that could really be a solid 27% or so gain from here, something for us to look into. And if we do get a pullback for that gap close, as I said, and then that could be a good buying opportunity to play this upside. Now, what could cause this retail bullish move higher? There are multiple trends. There has been Savita Subramanian from Bank of America made a statement that tax cuts will, in particular, corporate tax cuts will benefit if you especially look at how tax benefits the discretionary industry, and retail forms a big part of the discretionary industry from a sector perspective. She expects that sector to be the biggest beneficiary of tax cuts, corporate tax cuts. So that's the part that could play to this. So this was in the news this week. Savita Subramanian talking about is discretionary doing well with the tax cuts, and also if we get interest rates trending lower, it'll help put in more money into the purse strings. And if the stock market does well, there's also the wealth effect that gives a psychological boost and money from investors to feel happy about their stock portfolios and spending more on discretionary items. So we could effectively get this climb. This is an EQ-weighted index, which means it's got to be an across-the-board retail, not just Walmart leading the games here. It could be across-the-board gains, and that's something to be bullish about. So I'm bullish on the retail sector, perhaps waiting for an opportunity to buy on a pullback on that gap close, as I talked about. Let this pullback close out this gap near 77, and that could be a very nice buying opportunity to basically play that upside towards 105. Carvana is the biggest holder, but not really by far. It's only, as we looked at it, 2.2% of the uh, of the ETF because the equi-weighted is Carvana. But if I look at that Carvana chart, this is negative divergence. RSI is getting weaker as Carvana has been kind of trending in the 250 plus range, 259, 268, close near 260. I would wait for Carvana to pull back. This is looking more of a topish pattern near term, and a pullback to kind of come down and test its 50-day moving average near 211 can be ruled out on Carvana. In fact, if I look the 20 versus the 50, it is tested the 20 rising moving average near 247, pulled back to slightly higher. But because of this negative divergence in RSI being at lower highs and the PPO at lower highs, I'd expect the Carvana pull back towards the 211 and also close out this gap right here. So we see that there's a gap at Carvana. If we just do the across here, we can see exactly where the gap is. The gap, as you see, is near 213.98. So look at Carvana for a pullback there, and that could be a good time for taking, by looking into it for a trade. The other ETF is the VanEck ETF. This one basically is market weighted. So if you look back at the core holdings, the biggest weight is Amazon at 20% of the assets. Walmart is number two, which is at almost 9%. Costco is the one right below it, and so on. So let's look at that chart, the RTH. The daily chart of the RTH actually has a beautiful cup and handle that it already met and exceeded the target. 209.8 came down to 195, went to 211. That's the cup. Then a handle happened towards the late August into September, and then the breakout. That breakout from 195 to 211 measures to 227.27. It exceeded that. It is close towards 232. Bit of a negative divergence as it has climbed a higher high in price. RSI is not able to, eke out a higher price. PPO was slightly higher than the previous, but not by a tremendous lot. So there is weakening going on in momentum. I would not be surprised to see a pullback on RTH as well and see perhaps a test of its rising 50-day moving average closer towards the 219, 220, and we can see 221. So 220 to 221 is where there is support, and I wouldn't be surprised to see RTH pull back the month of December. Amazon is the biggest part of the portfolio. However, it's got a bullish trend, and we'll see how well it talks about its sales over the Cyber Monday and see how the stock reacts to it. Near term, I see a bit of a cup and handle on this daily chart, 195 to the 208 level. So that's a 13 point added to the 28, 221 is where I expect 220 to 221 is where I expect Amazon to climb next week. We'll see how well it reacts to it. It's got a beautiful ascending triangle from the 200 to 201 at the resistance level, higher lows here forming all the way from the August 151 to then the breakout. That breakout measures closer to the 250. So from 208 to 250, that's a reasonably good upside in Amazon. We're talking about what 42 points or so, 42 out of 208. That's roughly not so bad, a 20% or so upside on Amazon in the near term, in the next several months. And then Walmart, we talked about it. Look at the monthly chart. This is a long-term monthly chart. Have been an outstanding year for Walmart. Look at from 55, it kind of pulled down towards the 50 level, and then it took off from January. From 50, climbed up to 92. There is a beautiful rule that Helene Meisler talks about, the rule of 90/100, which says 90% of the stocks that exceed the $90 value in its stock price usually hits the 100 mark. It's called the psychological level of the 100. 90% of stocks that crosses 90 hits 100. So from Helene Meisler's rule, Walmart might be headed towards that 100. It's at 92.5. Momentum is strong. They could be continued buying to end the year with mutual funds and money managers chasing the stock. It is the call it the king of retail. So Walmart could be headed towards 100, but I would be cautious on investing in Walmart. There's not so much upside. While there is the adage that what's overbought can get even more overbought, but look at the monthly charts RSI at 88. Look at where PPO is higher than it has ever been at 15.4. These are extremely overbought levels. I wouldn't be surprised to see Walmart have a pullback. 2025 may not so much be the year of Walmart. After this parabolic climb, it could either go sideways patterns or it could have a pullback, depending again who's the beneficiary of money moving out of Walmart spending into other sectors, right? So if there's more discretionary money moving in, the good chance consumers may go spend money outside Walmart, and Walmart as a result could suffer while money goes and invests into the other retail stocks out there. So something for us to look into, and I would not be as bullish on Walmart, especially after looking at its monthly chart, how parabolic and overbought it is with respect to its kind of long-term trend. With that, happy trading next week. Next week is going to be a full week of trading. It'll be very interesting to see how the market comes back and reacts to the retail sales numbers disclosed over the next, like Black Friday sales we know tomorrow, but then by Monday we'll get to see the Cyber Mondays projections coming out on Tuesday, and then from there, it's going to be otherwise an interesting point where I think, given how much the market has moved, in many ways gone up too far too fast, I wouldn't be surprised to start seeing a crypto pullback next week, and followed with that, some of the momentum indicators, momentum stocks getting a bit of a breather. So we should be looking into that and see maybe we get the breather and then from there rise into the end of the year, the typical seasonal climb. With that, good luck trading. Thanks for listening in.